Guys, welcome aboard. Great to have you. Great to see you. I'm Will Sebastian and I'm going live in just a second. I'm just going to make sure we're running and everything's okay. Yep, we're live. Great, good stuff. Welcome aboard. I'm Will Sebastian. If you don't know me, I'm the founder of Be Profitable Trading Academy. I teach people all over the world and I trade myself. Today, we've got various news events for the US and Canada, mainly concerning employment and data and things like that. So that's what we're going to be talking about today. I'm also going to go over trades I'm looking at and setups and things like that. Uh, this is the live chat box. If you can press the boost, it's right up there. Okay, that would be fantastic. It's either down here where that boost button is, or it's up there. If you can press it, it'd be fantastic. Go onto the live chat box, ask me a question as well. If you want to send it to me via private message, you can do that too. My free training is underneath for those of you who are interested in changing your trading today and getting things right, as you'll probably see on this stream. So I'm going to give everyone a chance now to get on board. I'm just going to tell everyone we're live so they can get on. Today is quite important. It's the most news you've had all week, really. So there's a lot for us to talk about. I'll start on gold because I think a lot of people are going to ask me about gold. I have got the question box on the left ready to go. And if anyone has any questions there as well. So I'm going to give another 30 seconds just to let everyone come in. And then we'll go ahead. Okay. Okay. I think we're just about all set. Good stuff. Right, everyone's coming on board now. Like I said, if you're watching this on YouTube, don't forget to subscribe, comment, share, everything. Get it all done, and you'll be all set and golden. So I've had some really good questions on gold at the moment. What you're seeing currently, the reason why it's just getting a bit stuck and dawdling around, and this is why it's so important to use your higher time frames and look to the left. I say it all the time. I say look to the left-hand side. You can learn and you can understand a great deal by just looking at what's happened already. The only way you can make a judgment in the markets is by looking at what's happened before and making a future judgment on it. Okay, so if you're not looking back, you're not using higher time frames, you're probably not doing that, and therefore your hit rate will go down. Number one, um, because like I said, or like I was about to say, these kind of things where you can see all these candle wicks are the exact reason why the market is stalling right now. So if I just draw a line from around here, okay, you can see as we enter the same levels, more or less, that's where the market starts to slow down. And it's because that's where the rejection is in the market. Now, some people have taken longs and they've realized that the market's slown up and it's actually started to look like this. Okay. Now, clearly there isn't a big push yet, but you have to remember it doesn't mean you've necessarily got it wrong. It doesn't mean you've done anything wrong particularly. It's just the state of the market at the moment. Sometimes it will dawdle and then go like that. Sometimes it will dawdle and then go like this, which is probably more probable. Sometimes it will dawdle and get lower and then go up. Okay. If it doesn't fly your way straight away, don't panic. All right, you've got time and got room. Some of you would have bought it around 1836 to 1838. Okay, after taking long lanes all the way up here. You might be slightly underwater, but still, like I said, you've got much more upside than you do downside, and that's what gives the trade value. It's important to note I've just done a private members analysis. If you're a paid member, okay, which many of you are who watch these, go ahead and go in the members area. I've just posted a new video. It's all about what I call proportional sizing. In other words, looking at the probability of the market and the validity of the market based on how far it's fallen, how far it's risen, making a judgment on your size of your trade based on what you're willing to risk as a maximum. Sounds complicated. It's not when someone breaks it down for you. So I've just posted that. If you're a member, go and look at it. If you're not a member, those are the kind of perks you get with myself. Now there's tons of people coming in. Loads of people are coming in. If you press the boost, do switch the boost now. Okay, if you're just coming in, And please do ask me a question. I'm going to type questions here. Hopefully we'll get a good lot because we've got a lot of news to go through and a lot of charts to talk about today. So I'll leave that open for questions as we go. But gold, if you haven't entered it now, okay, it's important to note something quite significant. So as I said, these key price action levels on your monthly are really important. Some of them you haven't hit yet, okay? And that's why I think you're dawdling along on your daily, because I think the market doesn't want to go up just yet. I think it wouldn't shock me at all if you drip slightly. If you get NFP news today and it spikes down, I think it's likely you'll get a rebound there. Um, and our targets remain at these resistance levels for exits on the swing side. If you're not swing trading, you'd probably kill it a bit earlier, 1838, 1850 area. I know lots of people are holding for swing gains though, so that's where you would find it ideal to exit. But I wouldn't be shocked if gold gets near 1800 is what I'm saying. So tons of guys coming in to give you a background on where we're at on the markets. At 1:30 today GMT, I believe it's 1:30 GMT. That's correct. You've got average hourly earnings month on month for September, and then you've got year on year for September. Okay, so big price data. As you all know, when earnings go up, people get paid more, they spend more, and inflation can start to rise again. So that's what's really important today. You've also got non-farm payrolls, which basically refers to jobs that are non-farm, hence the name. That can affect things. It's all about employment. You have to remember all these kind of things, employment, earnings, it's all much of the same bubble. It's all about the economy, and the economy, how it's handled via interest rates. Because at the end of the day, interest rates are the key to everything that happens in an economy. Tightening the money supply stops people having money. It causes them problems because they can't spend it, and all things like that. That is what rules the value of currencies, what rules the value of gold, oil, anything and everything is ruled by central banks and their interest rates. So anything that can greatly affect that, we've also got the unemployment rate in Canada as well, and net change in employment in Canada. Anything that affects the central banks, i.e., employment data, earnings, inflation, CPI, anything like that is going to stick out. And when it's a red tagged event, okay, and especially, and the reason why I'm doing this stream, I guess, is because if you look at your Dixie, your DXY dollar index, you've come up and up and up and up and up. And I included this in my paid members analysis video I just filmed for the members area. For everyone who's paid me and is serious, remember, serious about trading. There's people who followed me and watched me on live streams for months, okay, and they're waiting for the secret key. And unfortunately, I'm not going to give it away on streams. Trade secrets belong to people who are committed and are willing to pay. I'll go over everything else, what I think is going to happen, how to trade in various ways. But the real secret part is not taught on here. You have to pay for it. That's just how the world works, okay? Now, anyway, on your Dixie, first of all, look at your stock oscillator. It's way, way up from way, way down. You didn't quite brush onto your 200 MA on your weekly, but you came well under your 20, 40, and 100. And that's very significant because the moment the price dips under those MAs, it starts to get extreme to the south side. It opens up the door for long side value, and that's exactly what you've had in a very steep fashion. As you'll know, on steep rises, okay, often you'll get steep falls, right? Like you had here. Now, the Dixie rose and rose all the way from this point up here, but look at the fall. Boom. It gets absolutely wasted down to the south side, right? And in the longer term, you're downtrending anyway. Okay, so if this downtrend were to continue and you had a lower high, it would be quite ideal if it occurred now. But nonetheless, like I filmed in my private members analysis, okay, we're coming up and up and up and up, so we should be short biased. Okay, the further away from these key moving averages you go, the more extreme the price becomes. As you can see here, you don't touch your 200 MA until you go from February 22 all the way to its peak in September the same year. Okay, so you come so far off that 200 MA, you still haven't got back to it, but your 100 MA only gets back when you get to here. So price, in other words, was so extreme because if you look at your 100 MA there and you look at this peak, it's just really far away. Like I say, the price always comes back to MAs. MAs just track the movement of price over time and it always comes back. But if you look here, week 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 12 weeks up in a row, okay, without any red, you haven't had that for a while. Yes, it has gone up very steeply, but you've got red down candles in between. So you've got to ask yourself, price has come up for that period of time, what do I want to do with it? And you're looking for falls back to levels of support. And of course, those moving averages I spoke about are likely to creep along to what would be reasonable for long entries because there's no long value at this point. So everything across the spectrum, okay, you've got gold coming down, New Zealand dollars down, ore dollar, pound dollar, everything has dipped down because the value of the dollar is going up. Okay, it can't last forever. And as per basically what I say all the time is the same thing. Okay, dollar rises. And how many weeks can it be green for? How many green candles can you really get until something happens, i.e. NFP, i.e. wages, and the dollar falls? Okay, that's all markets are. They're a swing from bullish news for the dollar, okay, to bearish news for the dollar. Right, so all you're doing is you're waiting for the news. You don't know when the news is going to come. You don't know when it's going to occur. The only thing you can naturally do as a trader is short at value. And that's just as relevant as today as it has always been. The only difference being if you flicked your daily, you've already fallen slightly. So if you wanted to short it, you've missed a valid entry, and I would only really short anything back up here. It's fairly likely the news will provide that, a little pop up and then down. So just be careful with that. But it's all about value. You don't know when the bad news is going to come. You don't know when the market's going to fall, just like you had here. It wasn't anything really bad for a long time, but you've got to remember the price also came from an enormous fall. So after a big fall, you tend to get those bigger rises, which is exactly why I'm saying a bigger rise tends to be followed by a bigger fall, okay? Nearer to key support, which you can see all around here. So that's really what we're waiting for. My bias on the dollar is short, therefore my bias on the pound, the euro, etc. is long and growing long, okay? The reason being because similarly, you've come all this way down. If you're just coming through the door, do type a question in here. Do press that like. Lots of people have pressed the like already. Smash the button right now if you can. Ask me something. If you're looking at the live chat box and you're thinking, well, I really want to know the answer to this question, and you haven't asked me yet, put it in there. If you don't do that, you are not going to learn. Okay? I mean, you might learn something. I would hope so. But it's better you ask me directly what you want to know so I can go over it. If you want to DM it to me on Discord or somewhere like that, you can. Discord's under there. Free training is there. If you want to change your training today, I get rid of all the nonsense out your brain with that training. There's so much of it online. It's really good to have it filtered. So I'm long, as I've called the pound dollar long. I called it long 1205. I'm still long. I'm holding it long, and I'll exit early at this early stage of resistance. That is what my members analysis today was about privately. It's the same for the euro. Okay, you've got to know when to exit, why to exit, how much to exit, how much to re-enter. And it's all based on the fact that you've fallen so far and you've only come so far back. But my exits come here because you've got weekly resistance. if I swap my time frames down, you can see that you've already stalled once over here, but you never quite hit this key moving average. And I think this next level resistance is going to occur at some point. This MA is going to come down, price will go like this. So new exits can come near a 106.5, I would say, and new shorts. And you would just short in line with this trend to the MAs. The higher you come up, the higher you'll short, right? Again, like I said, that's what my strategy is all about. It's all about using gains to protect yourself as the market rises. Okay? Because you will likely get chances to hedge. Many of you in my academy would have been hedging all these pairs as they fell. You can see, look, up, down, up, down, up, down. It's rarely ever a straight line. You could have long and shorted all of this, made all the money you wanted, and then eradicated anything that you'd got wrong. So to make it simple, my bias, I would kill off your longs near a 106, and I would do it in line with your earliest MAs. And if you're going to short, I would also do that very lightly. But the situation is the same. Dollar index is obviously the flip side, but just look at your stock oscillator on your pound, your euro. There's room for me to the upside in every case. Someone's asked me a question. Excellent, thank you. How's crude linked to me? Nate Dogg, Nate Dogg and Warren G has asked me a question. Great, thanks for that. It was in regards to oil. How's crude looking to me? Well, I'm trading oil myself. Oil, I really like long. I think this is a great point to get long. You've just got so much key support. You've got to imagine this is a really hard wall. You're slamming into it. I don't think it's going to hold to the downside. You've got remaining sentiment as well to the upside with supply cuts. It's a great place to hedge as well if you were short. Many of my members are doing that. I'm hedging long, and it's a really good spot to hedge. Do I find a correlation between gold or oil? No, not really. I mean, people ask me all the time similar questions like this. Do I find a correlation between X, Y, and Z? I guess the best way to understand that, and I say this in many instances, you've got to remember there's a lot of things which, correlation being one example, there's a lot of things where you can just simply open the chart and have a look. um, so, for example, oil on the weekly and gold on the weekly, that's where you peaked and fell September the 25th. Okay. At the same point, going back, you can see that they're not exactly the same. If you go from September to July, okay, you've got a rise in the value of oil and fall in gold, but rises in between. So you can see there's a massive difference, isn't there? One of them is coming up really sharply between August and September, okay? And you've got gold coming up as well. And then you've got gold coming down while this is still coming up. So essentially, the best thing you can do is just zoom out and ask yourself, is that correlation? The answer really, if we look from 2020, is no. Because if they were correlated, there would be the flip side or exactly the same, and they're not. So no, I don't, and I treat sentiment for both of those assets differently. Okay, gold sentiment versus oil sentiment, I don't correlate at all. People rush to gold when they don't want to invest their money via interest rates, okay, and fixed income, things like that. And they take their money away when the interest rates won't go up. That's why you get it down. But nonetheless, commodities are much easier to trade because they're so heavily sentiment driven. You can really easily load up any sort of economic news site and know exactly what they're doing because it will say supply cuts, output cuts, and it's all very easy terminology. Nonetheless, I tend to like I said, for example, you've had a lot of strong oil sentiment lately. You've now got to dip back, and therefore my bias is long. Gold has got negative sentiment, but I'm still long because I know there's a much better spot technically to buy down here, regardless of the sentiment. I know the sentiment eventually is going to change. Like I was just showing you on the Dixie, you had bullish sentiment for it to move up. Eventually, that ends. You might get it today with NFP news. The value of the dollar comes down. Do I think gold is going to buy? Um, I've just gone over gold. I like it long. If you haven't entered it already, I like it long 1803, but nonetheless, my bias is still long. I think you'll get a pop up between 1803 and 1883, $80 of difference like this. Okay. So I still think it's a long. Lorian Milan, I've seen you a few times. I think you registered to my webinar today. Um, I think I saw that. I hope you're well too. I may offer a discount on the webinar since you're watching it, so keep an eye out for that. What is my opinion about the dollar yen? Well, my opinion about the dollar yen is very method based, so you might be benefiting by, like I said, the webinar, etc. It's come up and up and up and up. It's got to be controlled risk for shorts. My bias is still short. I mean, you can see that by zooming out, but it's really a matter of risk management because, and my plans are very specific for yens. The longer these drift, and you get that a lot with yen pairs, they can really do this. So it's a great idea to change your size. If you're trading without plans, it's very dangerous across yens, like you've seen on the Swiss yen. Nonetheless, my bias is short. I'm just spacing my shorts out a lot more. If it's going to come up like this, it's an awful long way. You know, you've come up from, I called this short on an editor's pick. You've come up from 127 to 150. It's a good lot of move. I would much rather be short now, but you've got to be very controlled with it. And I wouldn't suggest doing it without risk plans, which you may have later or may not, depending on what you choose to do. But it's short for me. The dollar yen's short. Swiss yen, I've hedged so much, and I'm still short. It's a short now. CAD yen, minor short. You know, all yens are minor shorts at the moment. That's my opinion on the dollar yen. I think news could do a lot for you, but don't bank everything on it because if the news doesn't do it for you, you'll go the other way and you'll get roasted. The price action of oil is nice and smooth compared to Forex. Yes, that can be the case because it's much easier, like I said, to read between the lines for oil. If you look at oil, it's slumped straight down, okay, and you are right. If you look at the pound dollar, it's not particularly, but that's because you've got all these ins and outs. You've got all these ups and downs. All these levels have got to be broken. And that's why the Forex market drifts for a long time, and that's why it can be choppy. And often that's why I trade indexes, because they're quite smooth as well. You can see that with the FTSE where I'm long. I called the FTSE long yesterday. This point, if you took it long, you're well in gains. You could take that profit. I'm holding out slightly higher, 7520 at your second MA. But if you got the money on the table, you could take it. You could lock it in. Thanks for the questions, by the way. It's really handy. If you're just coming in, smash the like button. Like I said, tons of people in here. Just ask me anything you want. And if you're serious about trading, start with my free training there. If you want to take it further, send me a DM and you can get on board. Like I said, I may run a discount today, possibly, for those who are truly interested, because it makes my job easier. If you're interested in learning, it's far easier to teach people. But you have to apply yourself. The pound has continued to rally since I started the stream. I am also still long. And yep, see you later on the webinar, Lorian. Hopefully see you on board. Think you'll learn a lot. It's quite a long one. It's an hour and a half, but it does teach an awful lot. It doesn't tell you the secrets, but you do learn a lot. Hero of the day. It's been a very long time. I know you're not on board either yet, but you're back. And this is a really good question. Excellent question. But I still find oil a bit risky due to any political moves and news nowadays. How to reduce your risk in trading in such cases? The fall from last week was heavy too. So, mainly in my academy, this is a really good question. Oh, just print it. A really good question, this one. Um, and there's a very, very exact answer. Now, I like trading oil, okay? Because, and I wouldn't say it's any more risky than it has ever been, politically or whatever kind of market sentiment you're looking at. I think it's all the same. I don't think it's different to what it's been before. In fact, if anything, it's less volatile at times. Um, but the main part of your question, how to reduce your risk in trading, well, that's exactly what my full course is for. That can't be taught right now, and it can't be taught in two sentences. It's very, very specific. That's why I've got 140, 150 videos in my academy, and I upload them constantly. And I mentor people because risk management is the answer to successful trading. If you don't have risk management, you cannot trade. Um, so if I told you to hedge, I mean, you won't know how much to hedge, where to hedge, why to hedge, how to change your hedging, what size, anything, your maximum size, minimums, all of those rules make the whole thing work. If you don't have them, none of it works. There's another question by Nate Dog. Keep the risk down by having stop losses or trade only certain hours. So many of you will know I don't use stop losses at all. I never have on oil. I never will on oil. You don't need to use stop losses at all. You can just hedge. Like I said, if your short entries were wrong previously, you've now got the chance to hedge. That doesn't mean you just go ahead and say, well, you know what, I'll hedge, I'll buy, because you've got no plans if it comes lower. Okay, you don't know what size to hedge or how to spread it out. So I hedge, I DCA, I change my risk based on market sentiment, I cross portfolio hedge. There's many things I do. I fast hedge, I slow hedge. It depends on the asset, depends on the time, depends on my maximum drawdown for that asset, which varies across all of them, and it varies on market sentiment. There's tons of rules, but it all makes one thing. I guess from a very basic perspective, Nate Dogg is right. You can use stop losses, you can trade at certain times, um, but I don't think either of those things matter in general, but they are very basic ways you can manage your risk. It's important to note that sometimes stop losses actually put your risk up because you're going to be closed out before the market turns. I think a lot of people avoid the fact that losses do cause problems as well as help. But for me personally, I don't use them. Like I said, I never have, I never will. I've got orders, for example, on the FTSE, all the way up the top and all the way down bottom. I'm still holding them. Some of them I've held for months. And I just take them in and out as the market comes up and down. And in between that, I manage my equity if I need to reduce, if I need to hedge, if I need to change my size. There's all these rules I can use to do that. It's a constant changing mechanism. It's never as simple as just buying because you want to hedge or selling because you want to hedge. Okay, it's very specific. Um, Mental stops. Well, I don't know what the difference is really. But yeah, I get what you're saying. It's all very basic. Um, but yeah, a good question though. Yeah, and that's true. I mean, lots of people have never hedged and they don't even consider hedging, but it's very specific as a method. Like I said, don't try this at home. There's many people, there's so many who followed me for months and they say, oh, I'm hedging, but it's not working. And I say, yes, because you don't have the rules, you don't have the plans. You can't just, one does not simply hedge. It's not as easy as just, oh, I'm going to hedge and it will be fine. Okay, it doesn't work like that. It's very in depth. If you want to do that, then you can get in contact with me. My free training is underneath. I send out emails about it all the time. So yens I like short. I would say your yens are better off being shorted if they can push back to highs. As many of you will know, I shorted very high up. Well, I did a post about it. You can see it here. Look, why institutions short 100 fibs? I called it short. It fell massively. Um, I would short on all yens, pick up top. This is another good one. At what point do you DCA into your positions? Well, again, it's completely based. On this fall, I DCA gradually. My positions are never closer than a certain amount of pips. They're never above a certain size. They're never above a certain drawdown limit. And it's the same for my hedge entries conversely. Okay, it's all plans. You've got to plan, so that in any case, no matter how harsh the market, you shouldn't find it a bit risky. If you're finding the market's risky, your size is probably too high, and you've got to have a plan for every occasion. I talk about it all the time in my Discord. Again, if you're not in there, the link is underneath. But these are great questions. I do really appreciate them, so thanks for that. But yeah, it's all about plans. Does anyone have any actual charts they want to look at? I mean, I could pull up your S&P futures, for example. S&P futures are really struggling to bounce. That is getting destroyed by that early resistance. I wouldn't be shocked if you come down, but I really do like the validity of the support zone underneath. You've got tons of support here, and you've had tons of previous price rejection in the market. There's just layers of it, absolutely layers of it. I really like it long, slightly below. Okay, that comes 420. Again, hedging has to be with price action trading, all sorts of other rules. There's all kinds of other rules to put your probability of success up. It's not just one thing. It can't be described in 1 or 2 minutes. It has to be detailed and taught. And you can find out the hard way or the easy way. Some guys come to me, they say, "Oh, I've lost $20,000. Now I'm going to get on board." It's silly, it's stupid, and people do it all the time. They lose money, then they decide to actually take things seriously. That doesn't work, right? You will always lose money if you try and guess how to do something, because your positions will be too large, too tight. You'll trade too many assets. You've got no drawdown limits, no set risk limits for each asset. It just, because it needs to be different. Your risk needs to be different for gold, oil. It's based on how many pairs you're trading. There's a million different ways to manage risk. So you can't just guess how to do that. Now, there is still a lot of people in here, and I've still got fantastic questions coming through. If you do have any more questions, pop them in the chat box. Come in the Discord and ask me in the Discord. Okay, don't sit idle and just let other people do it. Nat gas have been asked about so many times. I don't trade it myself, but I've done a lot on it. So let me just move this back over the other way. I've got screens around me so I can see them all. So nat gas, I mean, if you go on your monthly, is best. Now, what I said before was that it is a long technically. People ask me all around here. I said, yes, it's a long technically, but it's just a question of time. Sometimes it takes ages to pop. Normally, when you've got high profile news events, that's when it rises, like this, okay? COVID, the Ukraine war, all that kind of thing. You're starting to get it now because of all the news around Russia. You can read about it. Russian government hikes fuel exports. Russia lifts diesel exports banned via pipeline. There's all kinds of things going on there, and that's what's pushing the price up. I wouldn't be shocked if you get to this point from a technical basis, but again, like oil and gold, is very sentiment driven. It's easier to trade in that for that reason. If you had it long though, I mean, you could close it. I would take your gains if you had them. You can see, like I said, it takes something really big to move it a lot. So that's what you would be waiting for if you had it long. I think there's tons of other things I would rather trade. Wouldn't be shocked, like I said, if you get to 3.5, but I would probably say you could kill it now for gains, or at least lock in gains. So set a trailing stop below 294, I would say, below this support. And yeah, you're coming nicely above your MAs now, and the price is starting to rise. Good question. Dollar CAD, absolutely. I did a video on this as well. I called it short. It started to fall, I think you've got a longer way to go. I'm holding my shorts. Okay. If you draw a trend line, you can see uh, this. Okay. Market is coming down. It's really handy to know how to properly draw trend lines. Computer does it for me within my indicator series, of course. Many of you know that. They're automatically drawn, they need to be parallel. Markets naturally move in ranges, they're range bound. So you can see that we're at the top of the range. I think you'll go like this, like that, probably. I'm still holding short for long-term swing gains. Like I said, trading with the current in the water, with the tide is easier. Swimming against it, that is where I think you'll get a bounce there, and you can just tell by looking back previous PA. Okay, but you need proportionate sizing, like the video I was talking about this morning for my private members. Um, so that is that. I mean, I just like it short dollar CAD pretty much. It's just in line with the overall long-term market trend. If you go on your monthly as well, you've been coming down since the millennium, start of the millennium. And this, a light gold, is very readable and very, very probable for short entries. Because you can see people have previously shorted here. Okay, so naturally the probability of success rises. Nonetheless, I'm short now and I'll continue to DCA higher once we get there, in line with my max drawdown limits and all other limits set by myself. So that's dollar CAD. Good questions coming in. Has anyone got any other questions on anything? I've covered most charts, not spoke about EuroCAD just yet. EuroCAD on your weekly is popping up. Okay, I think you'll probably get short on that, slightly lower. Pound CAD also is rising a lot more quickly, so I'd be a little bit more careful on shorting it. But nonetheless, they're all shorts. EuroCAD, Pound CAD, Dollar CAD. If you get up here, it wouldn't shock me for your Pound CAD. Pounds are rising quite rapidly. That's at 1688. So those are my CAD biases. Or dollar, I think you'll probably get lower to the long side. New Zealand dollar, the same. I think you'll come underneath eventually. I would just hold off both of those to get long. This is a good question as well. People ask me this all the time. What time frames do you prefer executing trades on? I execute trades on every single time frame. Plain and simple. Everyone who makes money trading knows this. You need to use all time frames as one thing. Okay, so like I said, never mind hedging and DCA and all those other rules. You need now to use all time frames to get the overall picture. Your longer term time frames rule the natural longer term market. Okay, that's what gives you the outlook, like I was saying on the dollar CAD, for example. I was saying how, if you look at your weekly, you can see there's a long-term downtrend, which is fact. Okay, it's there. Then if you go to your daily, well, what's the difference? Well, there's a slight bounce going on with early rejection. Okay, short sellers coming into the market. If you go to your hourly, the picture looks different even more. But if I go to my 15-minute, I could say, okay, well, I'm waiting for a push on my 15-minute so I can trade that weekly time frame. And that's what I do. You've got to use all time frames, because if you're getting short on your higher time frame, but on lower time frames you've just come down already, your entry naturally is going to have a gap of like 10, 20 pips. So you'll lose out a lot over time. So I use all time frames. That's the simple answer. When you can do that, there's a whole series on it in my academy. It works really well. But really good question there. I've been on for almost 40 minutes and we've spoke about a lot. I'll probably get to teaching my academy members in a sec. If you are a member, make sure you ask me anything. If you're not a member, I would get on my email list, get my free training underneath this webinar or this live stream, and you'll get an email telling you about everything that works. My YouTube channel, I've started posting on Discord, everything like that. You can come in all of those places and you can learn a ton. I only talk about what works, I only talk about facts. I don't deal in bullshit. So yeah, 40 minutes we've done. Thanks to all the guys who've asked a lot of questions. It really helps. If you're watching this on YouTube, don't forget to go under, and also you can get my free training, etc. Um, and I think I'll get to my own trading pre NFP. So thanks for watching, guys, and I hope it helps as always. Like I said, any follow-ups, just let me know. Anyone who's thinking about getting on board my academy, you've got a choice. You can keep trading in the wrong way and lose loads of money, or you can get things right. It's plain and simple. Thanks, Nate Dog. Perhaps I'll see you on board. I can see you're a premium member, so maybe we'll see you in. Same as everyone else. Thanks for coming, guys, and of course, I'll see you next time. See you there.